Hello friends, this is Raj Sastri from Raj Option Trading. Today is January 8, 2022. Let's talk about AEHR. AEHR is a leader in semiconductor equipment and materials. Stock tumbled big time after the earnings. Let's jump in and see if it's worth buying here. So with that, these guys are a leader in testing semiconductor equipments. Let's jump in and get started. As you look through here, we will talk about company overview, major ETFs, look at the competitive landscape, review a few charts, do a quick deep dive, and look at performance of the stock here and do a final verdict. So with that, let's jump in. As you can see here, we got AEHR Test Systems. They're a leader in testing various semiconductor parts here. As you can see, they got various types of testing here. They got burn-in and they got multi-wafer testing, various types of semiconductor testing. They're a leader in this space here. So with that, let's jump in here. So as you can see here, they got a lot of customer base here. We got Macom, Lumentum, Infi, Maxim, even Samsung here, NXP Semi. As you can see, a list goes on and on and on. This little company here, they're helping with the semiconductor testing and working with all these customer base here. So with that, let's jump in here. Look, we got various things going on here. We got various market drivers. One clear driver here is electrification of vehicles. All these electric vehicles need a lot of semiconductors, and this little company here is helping to test. And all these electric vehicles, they need something called a silicon carbide based power conversion. And to test those things, this company can help there. And they got automotive IC growth here with sensors, control information, and silicon photonics, and the mobility. Look, we got smartphone and various these headphones and adapters. This little company can help with testing those things here. And they're also into, there's also pressure in this testing area, and this company is trying to make sure they can help with the scaling and help with the driving the cost down here. So with that, let's jump in here. So as you can look through here, it's a AEHR Test Systems, ticker symbol AEHR. They're into testing burn-in equipment in the semiconductor industry, and they also do advanced burn-in, as you can see here. And it's a small company. Stock price is around $16, tumbled big time after the earnings. And as you can see here, it has just 79 full-time employees. Very small company here. Market cap is about $427 million. And look here, stock perspective here. See, stock has tumbled big time here. Look, there's a huge drop here, and then stock dropped again. So that's why stock is kind of dropping off here. So this is where we have to kind of jump in and see if it's worth buying here. And look here, we got a nice area here around say 16 or so. I think that's a good support level here. I would even, if it even comes below a little further here, around 14, 15, I'll be a buyer here. So what I'm doing right now is I'm buying this slowly. Valuation is high. I know many of you look at valuation. Valuation is sky high for this company. What we could do is we could slowly buy and slowly accumulate. No need to rush. As you can see here, we got a moderate buy here for the stock. So I think it's good to moderately buy at this time. And we got only one analyst here saying it's a buy here. So I would say it's good to moderately buy at this level, and then go from there. So if it comes further down here, I think around 15 or 14 is a great level here. But even at 16, we can slowly start buying this great company here. As you can see here, company plunged big time here. 20% drop in a single day. That's a huge drop here. But this company is known for these drops. Look here, we got a huge big drop right here. And this company is known for these type of drops here. No stranger for these drops. So we got two big drops already here around similar magnitude. Then we got here strength of semiconductor test and burn-in the electric vehicles. This is really a good tailwind for the company. as more and more electric vehicles become available. This company can help with the testing of these electric vehicles, especially those semiconductor parts. So with that, let's jump in here and go from there. All right. So from an analyst expectation perspective, we got here various analysts. Right now, as you can see here, we got $31 price target here. So I think it's a very good price target for this company. Right now, it's $16 stock. Look all the way to $31. It's almost double from what current price is. So, as you can see here, it's just based on one sell side analyst here. But that's why we got to consider it's just one analyst, not a lot of these analysts. Given the stock price is low here at $16 and valuation is high for this company, and also stock has run up so much last year. That's why even though we got a high target here, I would say be a little careful here and buy slowly. No need to hurry here. At this level you could buy a little bit. If the stock comes further down, you could buy more. If the valuation is low, I would say go buy it. But right now, because valuation is high, you could buy a little bit here and then buy more as the stock comes, if the stock comes down. So with that, let's jump in here. As you can see here from a leadership perspective, we got Mr. Erickson here. Looks like he's a great leader. Look, he's got 100% approval rating here. But this approval rating is basically based on just one rating here, one employee here. So that's why you got to be, we should not take this rating into consideration too much, because the number of folks rated is very low here. So that's why we got to be a little careful on this rating here. But this Mr. Erickson here, he's the CEO of the company since January 2012 here. Before that, he was in Agilent Technologies, as you can see here, and also in Verigi memory test systems. Looks like he knows what he's doing. He's into testing since very long time here. So I think leadership works out here, checks out here. I think he's been in this industry for a long time. So with that, let's jump in here. As you can see here, we got various ETFs holding this company stock here. Look, we got AWM Investment. They're holding a huge chunk, $18 million worth of this share. And then we got various other players here holding a lot of shares here, 16 million, 13 million, so on and so forth. So in a nutshell, all these major ETFs are holding a lot of these shares. They're expecting this company to do well. So with that, let's jump in. First, let's look at the competitive landscape here and go from there. From a competitive landscape perspective, we got AEHR here on the top. It's done great. This is sorted by 1 year performance, as you can see here. 1 year performance perspective, AEHR had done great. It's done about 551% in last 1 year. And then got various other players, as you can see here. On the AEHR, few things to notice here. Look, we got price to sales ratio 19. It's a little high, for this time around in the market here, with the rotation out of high growth names, high valuation names. That's one of the reasons this stock is being tumbled here. Even though the company had done great, from an earnings perspective, they beat the expectation. But analysts are looking for even more increase in the price targets and even in the revenue. That's why company, it's a victim of its own success here. That's why stock came down big time here. So it's doing very well. Look here, there is a sales 1 year done great. Quarter over quarter sales is good, nice gross margin. And then got various other players, as you can see here. There are a couple players. Look, there are top 4 or 5 players here. All these folks have got solid, net margin positive here. These companies make money. There is solid net margin. I think we should also look at some of these names here, given they have a nice net margin here. Look, companies like CAMT here, it does not have too much debt, very low debt here, 0.0 here. It's making money. Some of these type of names will typically do better in this environment. And I would not write out. I would not. I would go with even AHR here. Given it stumbled so much, I would moderately buy here and buy more if it comes further down. And then you got few more players here. As you can see, we got Applied Material, which is one of my favorite stock. We got Photonics here, $18 stock here. Looks like nice net margin here. And RSI is a little high. We can wait for a little pullback here and then buy this one. And we got KLA 10 core, one of my favorite here. ASML, I like that one too. All good players here. You could buy them also on this pullback here. Umbrella here, this is a great stock, fell down drastically. As you can see here, down 6.5, down 22% in 1 day, 5 day. This is a hot shot stock, as many of you know. Look, there is a high um, PS ratio 19, just like AEHR here, and company not making money. So Wall Street does not have patience for these companies at this time here. And we got a few more, as you can see here, great companies here. Companies like Lam Research is a great one. You could buy this quality company here. Look, PS ratio is 6, not too bad, not too bad at all. And I love Teradyne here. Teradyne is a great company here. As you can see here, this company is making money. You could buy this one here, this great stock, and hold it for a long time. And you got few more, as you can think through here. A lot of these name companies are making positive net margin here, and keep watching the valuation. It's also a little bit low here. You could look at some of these names with low valuation and go after those. So with that, let's jump in and look at few more details. All right. So many of you ask me, hey, how these companies have done over the period of time. So if you can see here, I got all these companies here, and I also have 2018 performance, as you can see here. So all these companies, as you see here, let's remove this checkbox here. So as you can see here in 2018, all some of these companies have struggled in 2018, but there are some companies have done nicely in 2018. So as you all know, 2018 was a high inflation environment. Feds kept on increasing the rates here. Even despite of that, companies like ACMR, CAMT, Photonics, AZTA, they all have done good in 2018. They had positive performance. But some of the other names here, they have negative performance, as you can see here. But I think it may be okay to slowly start looking at some of those names. And finally, we have our company here, AEHR, down here. And AEHR has done negative 50% in 2018. But it did very well 2019, 2020, 2021, as you can see here. So that's why, at this time, we should take a look slowly and buy. Given look, performance was great in 2021. So I think that's where we don't need to buy a lot at this time, but buy a little bit and go from there, especially because stock has tumbled big time. Could be good to buy a little bit, given this stock is known to bounce back pretty quickly and pretty vigorously. So with that, let's jump in here and look at a few more details. All right, so now let's look at chart here. From a chart perspective, as you can see here, we got AEHR on top here. AEHR, huge big tumble here, as you can see here. I would say around 15 level is a good level for this company here. And as you can see here at 15, there is a nice support level here. But even up here, I would be a buyer in a small position in this company here and go from there. Look, we got on the balance volume trying to go higher. It's actually stabilizing right now. That tells you even in this drop here, folks are buying this company here and going from there. That tells you, there is a support level. There is smart money flowing into this stock here, even after this big drop here. And then we got ACLS here. ACLS look nice on the balance volume. I like it. It's increasing. And this stock also dropped, as you can see here. You could buy some ACLS also here. It's also a good one here. And then you got CAMT. This one, as you can see here, stock dropped. And on the balance volume is trying to decide where to go here. You could look at this one too here. And then got KLIC here. I like this company also. As you can see here, stock is kind of trying to see where to go here. It's in the box here, but on the balance volume, as you can see here, is rising. So you could buy KLIC also. It also tumbled big time here. So with that, let's look at a few more charts here. Look, we got AMCR here. It's also in this rectangle here, trading range, as you can see. This is also a good one here. Look, on the balance volume, as you can see here, it's rising here. It's a good company to initiate a position here also. And then you got Onto here. As you can see here, Onto is also doing pretty well here. Stock is trying to decide where to go. On the balance volume is kind of came down here at this time. It's trying to decide where to go here, and stock also dropped, as you can see here. So you could look at this company also, and see if you can initiate a small position. Also keep watching the price to sales ratio. Some of these have got a little higher price to sales ratio. And then you got Form Factor here, again a great company. This also stock is falling off late, but look what's happening. On the balance volume is rising. That tells you folks are buying this company. And then finally we got UCTT here. UCTT stock is also dropping, as you can see here. And on the balance volume is trying to decide where to go. You could also look at this company and see if it works here. So with that, let's jump in here and look at a few more detail about AEHR. So it's AEHR, not lemonade. Let's remove this here. So let's look at AEHR deep dive here and go from there. All right, so AEHR test systems, as you can see here. Let's talk about few things here and go from there. Look, right now this company is in the technology area. Analysts are recommending a buy here, and it's IPO very long time ago, as you can see here, back in 97, and market cap is very small. It's not a huge company, it's a small company, and relative volume is high because stock came down a lot of volume, and beta is 1.47. This tells you this company can go 1.47 times higher or lower than S&P 500. Typically last year it done great, as many of you know. And from a sales and margin perspective, it's got a nice gross margin here, 40%, but net margin is negative right now. This is one of the reasons Wall Street does not like this company right now, because of the high net margin and also high price to sales ratio. Typically this is high valuation. That's why Wall Street does not like this company at the present time here. And from a next year growth perspective, it's got a nice growth here from an earnings per share perspective, as well as from a sales perspective. That's a good number here. And as you can look through here, got financial ratios here, debt to equity low here, not too much debt on the balance sheet, just $2 million debt on the balance sheet. But on the ROE and ROA side, because company not profitable, these numbers are negative, as you can see here. And from a performance perspective, it's done great for 1 year and 2 year, 5 year, as well as 10 year. But right now it's down in 1 day, 21%. That's why it could be a good opportunity to look at this company and buy slowly. As you look through here from a financial grade perspective, it gets a C here, and growth perspective gets a D here, and profitability is F here because company not making money yet. Altman Z score, which tells us the financial stability, that's very high here, that's good here. And Piotrowski F score is 4, which tells us it's doing okay, it's not great. I would love numbers above say 6 or 7 here. 4 is not super bad, which is also okay here. I think as company becomes profitable, these numbers will improve, but at the present time it's okay. So with that, let's jump in. So let's look at some of these numbers here from an earnings per share perspective. As you can see here from an earnings per share perspective, it's trying to make some improvements. It's trying to go slowly higher. Even though it's a negative here, there is some progress. I like that. And from a sales, from an annual perspective, as you can see here, annual sales is a little bit downtrend right now in 2021, but they got good guidance for the future. Shares outstanding is pretty constant. I like it that way. It's not increasing. That's always good. From a quarterly revenue perspective, as you can see here, it went up nicely in 531, 831. It's a little bit down here in the recent quarter. I think they did pretty good. From an R&D perspective, this company is spending money on R&D because they got to make sure they can scale the company nicely and do more and more testing. It's very good to see they're spending more money on the R&D. From the net income perspective, as you can see here, they are trying to turn into positive here. I think I like to see this continued as we go forward. So with that, overall, I think company is doing pretty good. I think they're trying to improve. This does not have the latest quarter, but it's trending in the right direction, as you can see here. Now let's look at quarterly results and see what we can make out here. This also does not have the latest quarter, as you can see here. Look, stock has been doing nicely here. So as you can see here, market cap has been increasing pretty nicely from $39 million back in 2019 to right now it's about 450 million or so, increasing pretty nicely. Stock price is also increasing pretty nicely. Right now it's about $16. That's a tremendous increase in stock price. Sales is also increasing, as you can see here, nicely. That's good. Quarter over quarter sales change is good. That means they are surprising Wall Street with the positive surprise on the revenue side of the house. Earnings per share, they're also surprising positively. That's also good here. They do have cash in the balance sheet and very low debt, as you can see here. And I also like it because they are reducing their debt here. That's always good. Look here, debt came down from 5 million to 2 million. That's always good. And from a debt to equity perspective, it's a low debt to equity, as you can see here, 0.1. That's a good number. It's a decreasing. That's always good. They do have free cash flow, as you can see here. They got operating cash and margin. I think right now it's negative, but it was positive in the quarter ending 8/31 here. And as you can see here, price to sales ratio is a little high for this company. I think it even increased now in the latest quarter. In the quarter ending 8/31, it was 8.8. So with that, numbers are great. I think this company is victim of its own success, as we call it. So we'll look into this little more details and go from there. All right, now we are going into quarter yearly performance. As you can see here, we got yearly performance all the way from 2022, which is the current year, back to 1998. This company is known to go up and down a lot. As you can see here, off late since 2019 or so, this company caught fire. This is doing nicely in the last 3 years. And this company is known to do not so great. As you can see here, 2015, 2014, negative years. And we got few more negative years here. But off late, company has turned a corner and doing great. That's one of the reasons after this huge big drop, I think it's okay to slowly initiate a small position here, even though price to sales ratio is high. With all this electrification and more semiconductor needs, this company can help with the testing needs here. And from a monthly performance perspective, look, huge drop in January here this year, and there was a huge drop in November, and company came back up pretty nicely, bounced back pretty nicely in December. So that's one of the reasons when this company drops like this, given they are doing a good job with the testing, this company tends to bounce back pretty quickly. That's one of the reasons I like this company. Look, volume is pretty nice here. 4.28. During the drop, volume did not increase, but when the stock was going higher, we got a huge volume. I always love to see the volumes when the stock is dropping big time. If the volume is not great, that tells you the stock can go higher. So with that, I think it's a good sign here. It's okay to initiate a small position. So let's jump in here. Now let's look at the stock performance. As you can see here, stock is a little bit, it did great in 2021. As you can see, a huge increase, huge drop here, and one more drop. And as you can see here, there is a nice support level around 14 or 15 here. I think that's a great support level that should hold here. That's one of the reason at this point here around $16. It's okay to initiate a small position here. If it comes down to the support level around 15 or 14, you could buy more. So with that, let's jump in here. This is a weekly chart, as you can see here, a 5-year, 1-day chart. It's a 5-year, 1-day chart. I see. Okay. So as you can see, I think we should probably look at buying something here and then buy more around the support level around $15 or $14 if the stock drops further. So with that, let's jump in here and look at a daily performance, a smaller chart here. From a daily performance perspective, as you see here, it's in a tight box here. Stock has gone up, came down, went up again, came down. I think it's a good support level here. Around $15, as you can see here, is a good support level for this stock here. If I think we can buy at this level. If it comes down, we could buy more. And as you can scan through here, we got RSI levels. RSI is trying to come down right now. It typically happens when the stock drops like this, RSI also drops. And right now, as you can see here, we got DMI. We got red line want to go higher, blue line wants to come down. That's a bearish divergence. That's why I think it's right now stock is clobbered. It's okay to initiate a small position here. And then look here, check-in money flow perspective always happens when the stock drops like this. Smart money comes down like this, but it will kind of pick up again. Look, there's a huge drop here. Check-in money came down, but it went up again. This time, I think something similar will happen. And on the positive side, keep watching here on the balance volume, even after the drop. People are buying. There is more buying than selling. That's why on the balance volume is pretty steady here. And as you can see here, IV percentile implied volatility is 53. That tells you for the folks who want to sell some put option beneath the stock price, you could do that. But only issue is stock price is so low, you will not get too much premium. So with that, let's jump in here. All right, so let's look at option chain here and see what folks are doing. As you can see here, stock price is around $16. Huge drop, as you can see, dropped by 21% in one single day. And stock was as high as $27 in 1 year. And look, we got $15, something, around current stock price here, closest here. There's a huge interest here, 2,269. So folks wants to buy call option at $15, but keep watching here at 22.5 here. There is also a good amount of open interest here, 469. That tells you in the option market, folks are betting the stock will go higher. Even at $40, there is some good open interest here, 459 contracts. That tells you the option market, folks are betting the stock will go higher. On the put side of the house here, there is not too much volume, nowhere compared to call side of the volume here. That tells you on the call side, folks are betting the stock will go higher. That's why they're buying call options. So with that, let's go into some more detail here. Look at the option statistics. As you can see here, we got 21,000 call options traded. We just have 7,000 put options traded. That makes the put call ratio 0.3. That's a bullish scenario here. There are more people betting the stock will go higher. That's one of the reasons, even though valuation is high, given semiconductor shortage and the need for more and more testing and the electrification, I think it's okay to initiate a position here and buy some AEHR and buy more if it comes down further. All right, so now we looked at all the details. We looked at the fundamentals. We looked at the technicals. You might wonder, what should I do now? So as you can see here, revenue for Q2 was 9.6 million. It's a little company, not too much revenue, but still sequential increase of 70% over first quarter. and 470% year over year. Company is growing nicely and firing in all cylinders and trying to scale and test more and more and more. And their backlog was nice here, the highest backlog in the company's history. That's also good. That tells you they have a lot of orders they cannot fulfill. The demand is more, and they should really scale up and do more. And the projected revenue is 35 million or more for the second half of the year. It's 2.3 times of the revenue. This is one of the reasons, even though they gave a nice projection, Wall Street was expecting even more surprise because companies has surprised in the past. The expectation is company will keep surprising. They reiterated their guidance. That's why Wall Street was not super happy. That's why stock came tumbling down. And this company also sees very strong interest in wafer and burn-in test for the silicon carbide devices. This is where the electrification and electric vehicles will come in play, and they use silicon carbide. I think this is going to continue to increase the demand for testing from by AEHR here. And multiple forecasters and analysts expect silicon carbide devices. Demand for this will grow at the CAGR of 30%. That could be a nice tailwind for this company. They can really do well in this market here. And finally, they're asked to do more and more testing here and do more wafers. I think that's why there is a lot of demand here. If this company can scale up and help with the more and more testing demand, they can do very nicely. So in conclusion, I think stock is overly punished here. I would say buy moderately, and if the stock comes further down, I would say buy more. Looks like around $15 is a very good support level. I would buy some now at $16, and if it comes to $15, buy more. There is a lot of headway and a lot of runway for this company to grow further. It's still a very small company with just 79 or so employees. I think the great path ahead here. I would say buy moderately and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.